This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Dustin Hoffman.
Well, good day, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Hoffman. Today is Friday, February the 9th, 2024. So glad you could join us. Coming up a little later in the program, we talk about the reactions to the WASDE report yesterday, and also we talk about chicken wings, which is acceptable this time of year. But first, we're going to kick things off with a check at the closing markets. It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. Well, we're talking right now with Ross Baldwin of agmarket.net here at the end of the trading week. And Ross, what did we see to round out this week after a WASDE report a day ago?
Hey, Dustin, thanks for having me. We ended the week with new contract lows across the corn market. Soybeans, they sold off. They were down 9 cents heading into the close. The wheat market did find a little bit of strength here today. It's been choppy. Wheat has been, but I mean, it was 6 to 9 cents higher.
All right, and so what's been kind of that movement there with the wheat market? What's causing that right now?
I mean, if you look at the wheat market, I mean, you go back just over the last several months, and wheat has just it's continued to grind lower, and we're kind of holding support down here at this lower end of this technical range that we've been in. So given the short position that the funds have held in the wheat market and given the sell-off, it just seems that wheat's got a little bit of support down here. I mean, you know, the WASDE report yesterday, the global wheat stocks, they were a little bit lower versus the average trade guesses, but it's not, I wouldn't say it's a fundamental spark that's going to send wheat sharply higher anytime soon, but it's just wheat will find a little bit of support down here.
So as we talk about corn and beans, though, I mean, we got the numbers from CONAB yesterday about beans, and they were significantly different than what USDA said. Is this WASDE hangover that we're still seeing today, or is this just pressure on the markets in general?
I think it's a WASDE hangover. The CONAB number, like you said, it came in a little over 149 million metric tons, which was, I mean, that's significantly lower than where the USDA is, which it wasn't a huge surprise that the USDA slow played it, but them only lowering it 1 million metric ton when the trade was still expecting it to be, I believe the trade was looking for it to be 3 or 4 million metric tons versus the 1. So it the markets, the trade didn't like to see that. And the other thing that the soybean market yesterday, you had the USDA increasing U.S. ending stocks 35 million bushels as a result of less exports out of the U.S. So that's the struggle, you know, where we were below that, you know, 300 million bushel carry out, we were at a 280, and all of a sudden you jump back up to a 315, and it kind of took the little bit of bullishness that, you know, this bean market had. We know South America is still going to be a big crop. The world production is going to be big, but you still had a little glimmer of hope per se that, hey, the U.S. still has tight bean stocks. And now with how uncompetitive we are on soybean exports, they increased that. The ending stocks were at 315, and it's kind of like, hey, this that glimmer of hope's gone for the bean market right now, it feels like.
And what is it that's pressuring corn right now?
Corn fundamentally just has no story. The world ending stocks, they were a little friendly, I guess you could say. We still have plenty of corn worldwide, so I don't want to act like that was really friendly. It wasn't. It was a little supportive. They lowered the South American corn crop 3 million metric tons. The world ending stocks, they came in at 322 versus the trade guess, I believe, was 304 is what it was. But, you know, so that number was a little bit better than what the trade was looking for. But corn, the U.S. were competitive right now through the end of March, but that we're not going to be competitive here, very soon. And it's just the corn market just doesn't have a fundamental picture. The U.S. situation, we have plentiful stocks, and the farmer's the big long in the market. So it's there's going to be plenty of corn that'll be moving before too long.
All right, well, let's move over to the livestock side of things. How did we shape up with the cattle and the hogs today?
Cattle were on the quiet side of things today. February live cattle, which they're in delivery, they led the charge. They were 85 cents higher. And the exciting and interesting part for the cattle market today is cash is still very undefined on the week. There's been some bids of 285. There's been some small trade at 285, but for the most part, those bids have been passed. The South has been really quiet. So you got a Fed board at 184.62, which last week's cash, dress prices were around 280. Live, call it 78 is where it is. So, I mean, the way things are sitting here this afternoon, heading home for the weekend, it sure feels like there's still a lot of cash trade to play out. My bias is we're going to see cash sharply higher versus last week. The cattle market, it still has that fundamental support coming out of last week's the semi-annual inventory report that we saw over a week ago. So that's going to continue to provide underlying support to the market. We saw the market lower on Monday, followed by a sharply higher trade Tuesday. It was a little bit lower, I believe, on Wednesday, followed by sharply higher trade again yesterday. So the cattle market is on solid footing, and weights have really dropped. Weights have dropped over 30 pounds over the last 3 weeks. So the cattle market's in good shape. We had strong weekly export sales, just a little under 21,000 metric tons. China's been an active buyer ahead of their Lunar New Year. And over the hog market, hogs were a little bit higher today. Hogs, they've had a huge rally over the last month or so, and they've been grinding lower, a little bit lower here, off that oversold condition. But the big news as we started the week was China's hog prices. They have been advancing, which is that's a very good sign for the hog market to see. And the U.S., we had strong weekly pork export sales this week. It was just a little under 40,000 metric tons. So the hog market's it's definitely feeling in better shape than what it has been recently.
All right, so if folks out there want to, get some advice from all of you at agmarket.net, maybe get some ideas of how they should be thinking about their strategy for marketing, what's the best way for them to get in touch?
You can get a hold of me at our office here in Anthon. It's 712-373-3276, or you can go to agmarket.net and find any of the ag market brokers.
All right, well, Ross, we thank you so much for taking the time to visit with us. We'll talk to you again real soon.
Thanks for having me, Dustin.
That again was Ross Baldwin of agmarket.net. Let's take a look at the closing numbers on the Iowa Agribusiness Radio Network market screen. March corn is down 4 1/4 at 4.29 even. Soybeans down a dime at 11.83 1/2. Soy meal down 30 cents at 346.80. Soy oil down 68 cents at 47.26. Chicago wheat was up 8 1/4 at 5.96 3/4. Kansas wheat up a half at 6.01 1/2. Minneapolis wheat up a half at 6.84 1/4, and oats down 3 1/2 at 3.75 1/4. February live cattle up 85 cents at 184.62. Feeders up 30 cents at 247.15. April lean hogs 80 cents higher at 81.15. And pork cutouts were unchanged at 8. We're going to take a short break and hear from our sponsor, the Iowa Soybean Association, and the soy checkoff. When we come back, we talk about the WASDE report and chicken wings. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
Welcome back to AMPM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Well, yesterday we got the WASDE report, and it was particularly bearish, particularly in the soybean markets. But you wouldn't have been able to tell that by how they closed at the end of the day yesterday. We talked with Allanedale commodity broker Greg McBride, and he detailed the numbers from this month's report.
Well, minor changes to the corn side of things. We did see a decrease of food, feed, and industrial on the corn usage side of things. So a a little bit on the bear side there. We were looking for a minor decrease in ending stocks, so you instead get a minor increase to 2.172 billion bushels. So nothing major when you're talking about 10 million bushels versus the carryout of over 2 billion. It's kind of a drop in the bucket on that one. So nothing major there. On the bean side of things, this is where it was bearish. It was clearly bearish. We saw a decrease in export demand of 35 million bushels made by the USDA. We were personally looking for somewhere between 10 and 15 million, but they obviously see things a little bit differently and cut it by 35. That was the only major change to the beans. So you're looking now at a 315 million bushel ending stock number, up that 35 million bushels from 280 last month. So overall, the U.S. side of things, on the bear side, you did see an increase of 10 million bushels to the wheat ending stocks as well. On the world side of things, slight decrease off of corn and actually lower than expected. Same thing on the wheat, whereas the beans were actually higher than last month and about 3.5 million tons higher than expected. So an increase when we were looking for a decrease and significantly higher. So really a very bearish look to the bean side of things when you really lay it out that way.
Now, those numbers would normally cause the markets to plummet, but they actually held together at the end of the day. Soybeans miraculously actually ended in positive territory. McBride said South America and CONAB reports made aggressive cuts to the crops in Argentina and Brazil, and that was supportive to the U.S. grain markets, despite what USDA said earlier in the day.
Yeah, so when you look at what we got out of CONAB today, so the USDA comes in and makes their adjustments to what they expect out of the South American crop, and they made no changes to Argentina when we were looking for a slight increase to both. So that's going to lean to the friendly side. But when you look at CONAB and specifically Brazil, they made their announcement of their numbers earlier this morning and cut to bean production from 155.2 down to 149.4, so almost 6 million tons lower than where they were at just a month ago. And on the corn side of things, they lowered by almost 4 million tons. So a very aggressive cut by CONAB. Whereas the USDA actually played it a little bit tighter. They did lower the corn by 3 million tons from 127 to 124. That was in line with estimations, but the soybean side of things, they only dropped by 1 million metric tons. Everybody's going to look at that and say, well, CONAB should have a better feel for the crop down in Brazil because they have the boots on the ground. Yes, we have an ag attaché down there, but overall, we shouldn't have a better insight into what that Brazilian crop is. So the fact that CONAB was a little bit more aggressive on their cut is probably one of the reasons that we're holding things as firm as we are. Yes, we're down right now as we go into the last 30 minutes of trade here, but this could have been one of those bearish reports from the USDA for beans that could have easily dropped us 20 to even 40 cents, and maybe the corn dropping 10 to 15 cents. So it was one of those reports where it could have been much worse, and it still could be, but it kind of feels like maybe CONAB's number is kind of holding us firm because that crop is not necessarily as good as what everybody thinks. Well, it depends. I mean, a lot of what we're looking at is not necessarily driven by these numbers. It's more fund-based money, managed money coming in and continuing to sell it. Now, if there's concerns or there's question marks revolving around this South American crop, that does give the funds maybe a reason to let up on some of these short positions. It doesn't necessarily mean they're going to go back to a neutral or even a long position. They could have just enough to maybe you want to call it weather premium or whatever you want to say, maybe just enough doubt in their minds to lighten up on some of these short positions. Because as of right now, they're short about 87% of their record short position in the corn, and they're short about 64% of their record position in the bean. So they are they have been and they continue to sell into this thing. And at some point, the way this thing works, a lot of times when these funds start to get out, it becomes well, I don't want to be the last person holding the short position when they lighten up, and you start to get the lemmings going over the side of the cliff.
That again was Greg McBride of Allanedale. Well, with one of the largest years of NFL viewership, most people are thanking the Swifties for that, the Super Bowl is set for Sunday. Kansas City and San Francisco will be kicking off, and lots of eyes on the game means lots of food to be served at your party get-togethers. And, of course, chicken wings are always one of the priority staples at these parties. And the National Chicken Council says, in fact, Americans are going to put away about 1.4 billion wings on Super Bowl Sunday. I think 0.4 billion is just going to happen at my house. While this is a massive number of chicken wings, it's actually comparable to what we sold last year because the supply really hasn't changed all that much. But fortunately for wing lovers, the prices are down this year, which means packing it away at the Super Bowl party will be a little bit more economical. And that's been a rundown of our ag news, and that brings us to the end of today's program. You can find all our content online at iowaagnet.com. You can also follow us on Facebook, X, TikTok, and on our YouTube channel, where you can also get notified every time we put out a new video project. Don't forget about our free market podcast coming your way from Google, Amazon, Apple, Spotify, and Podbean. From the IARN studios in Des Moines, I'm Dustin Huffman. For Andy Peterson, Riley Smith, and Mark Magnuson, we thank you for watching. This has been Ag Matters PM.